Hello traders, this is Adam Beatty with Adam's Option Investment Newsletter. We're doing this video today to help clarify our program. We'll be going over some information on the newsletter, the placing an order, and touching on some common questions that we've been receiving. First, as a disclosure, I want to mention that the alert and trade shown in the video is an old alert we're using for demonstration purposes. Also note, for the purpose of this video, we're using a demo account. The brokerage we are using will be Thinkorswim, but these trades work on most other platforms. So let's get started. Now I have in front of me an alert that was sent through an email. All of our alerts will be sent through email before the market opens. This will give you ample time to review and place the trade without having to stress over making the right time or missing the order itself. If you're unable to get emails, you can also log in to shareplanner.com and access our recent alerts. But like I said, our primary communication is email, so you will be receiving all our alerts through there. Let's break down our alert real quick. At the top, we have the date that the alert will be placed, also the status and what kind of trade it is. Our statuses will range from open a new position, adjust a position, or close position. Right now we're opening a new position. The next group starts off with the trade and the type. Right now we have a vertical spread, and we'll be creating that on the S&P 500 for the August portfolio. As our trade, we are looking to sell the SPX, which is the S&P 500. August, for our expiration month, the 1105 strikes, and there will be puts. And we're also looking to buy the August 1100 puts. This action of buying and selling puts, or buying and selling calls at the same time, creates vertical spreads. Another important note down here is the premium. This is the amount of money we will be receiving. We write it as 25 for a complete contract, or 0.25 as each share will have. When entering the order, we'll be using the 0.25. Also featured is some basic information that you would like to know, which is the max return that we have, our break-even point, how many points away that is, our underlying price, the days till expiration, and the probability of loss. We also like to include an explanation of our trades. We don't feel it's just enough to give you the trade and trade information without why we're making the trade. We also usually include a chart to explain what we're seeing, and usually our basic support lines that we like to keep, and usually we draw on our break-even point. That way you have a visual representation of where the trade could go, what it should be doing, and where the break-even should be. All right, now that we have all the information, we can go ahead and place our trade. Here is the Thinkorswim trade menu. Right now it's on the SPY. We're going to go ahead and change that to the SPX. Now all information is today, which is not when the alert was placed, so the information will be a little skewed, but it'll be good enough for the demonstration. Our trade asks for the August, so we'll open up our August and we'll scroll down to the 1105s and the 1100 puts. On the right side we have our puts, on the left side we have the calls. Right now we'll be focusing on the puts. Here's our 1105 and 1100. Now in most brokerages you can usually group them together by selecting it as a vertical spread. In Thinkorswim it's just up here where it says spread, you just go click vertical. In some brokerages I know that you have to actually select both. You'd want to sell the 1105s and you want to buy the 1100s. In our case we'll just go up here and click vertical. And as we can see, here's 1100, 1105. This is if we want to sell or bid, and this is if we want to buy it. So we're going to go ahead and click on our bid, and as you see it brings it up. Like I said, this information is a little off, so right now it says 0.05 when we're going to up this to 0.25, and we're going to make this 1 just for demonstration purposes. Just to go through a little information here, as we can see the spread is vertical. Here's the sell and buy. We want to make sure we're selling the 1105s and we're buying the 1100s. The quantity of contracts is up to you. Just you got to make sure that they are the same number. In this case, it makes it the same number. Our expiration month is August, which was featured in the email. Here's the strikes. We want both puts. And our premium. Premium is here. It's, like I said, it's the 0.25 that we put in. A lot of times the brokerages will tell you if it's a credit or a debit. We want to make sure they're credits. And we're also looking at a limit order. Now, we make sure you place all orders as limit orders. Usually you're given the chance of market, limit, and stop. They're the most common. We want to make sure it's a limit order. This will make sure you get a price that is the 0.25 or at least better. That means you can get fills of 0.3, 0.35, something along those lines. We have noticed several of our orders being filled at better prices than what's in our alerts. This is excellent. This means you get more money and the trade still goes on. We like to set everything to day. The GTC is good till close. Our orders are time sensitive. We don't want to keep them going if they don't get filled on the first day. We might change some things. We might completely remove the order. So we just like to leave it on day. And then we would go ahead and confirm and send. And this gives us all our information. Right now you see the break even is 1104.75, which is the number we gave you in our email. Max profit is $25, which is the premium. This is actual the 25 and not the 0.25. Our max loss is $475. This is also the amount of margin that you would have to put up. And if you want to know the calculations there, then they are in the FAQs. Basically, it gives you the cost of commissions and final trade, and then the resulting effect. Just a quick note on commissions. Option commissions vary widely between brokerages. Don't be afraid to try to get your brokerage to lower the commissions. Thinkorswim is usually pretty good about negotiating rates lower. It doesn't hurt to ask. Try to find some other brokerage around the market that maybe have a lower one and ask them to match it. A lot of times they will. The worst thing they could do is say no. All right, so that's it for our trade itself. And the only thing we would do now is hit send. It would go on the market. When the market opens, it will start working. It'll either fill or it won't. You don't have to worry about that. You can take the day off, go back to vacation, go back to work, whatever it is that you were doing, you're done. But while we're here, let's talk a little bit about risk and reward. And we get a lot of people that see the max profit as 25 and max loss as 475. And I know you're thinking, wow, Adam, that is horrible. Well, yes, the risk reward is about 20 to 1, and that's not what we're really taught to look for as traders. However, when trading stocks with a bad risk reward, you're really receiving nothing in return except the odds stacked against you. In our case, we've sacrificed our risk reward to gain in probability. Let me explain. Let me pull up a single option so we can compare. So this is the single, and since our spread would have been a bullish play, we'll look on the call side. Now, buying a at the money call, we can go over to the delta, which will give a rough estimate of probabilities, and we see that we have a little over 50% chance, 53 to be exact, of this option finishing in the money at expiration. And you're talking a little over 50-50 here. To pull up our trade, you can see that our max profit will be infinite, which is always nice, but our max loss is roughly over 3,000. Now, that's still a big risk for a 50-50 shot. Going back to our play, the 1105s, we see the delta around 0.04. And it means this has a 4% chance this strike will finish in the money, which also means we have a 96% chance of finishing profitable. Now, I don't know about you, but I love being right. And with proper credit spreads, we're right about 95% of the time. I say 95% because we're not always right. There's sometimes that a play will just take a bad turn. It just not go our way. But that's okay. We don't let our losses kill our profits. We take our losses early and quickly. A mismanaged option portfolio, whether you are long options, spreads, or trading credits like we are, they can turn ugly if you do not pay attention to what's going on. Our number one job is monitoring open positions. We have firm thresholds for what we accept and expect on all our positions. We're not afraid to cut out a loser. We are not wishful, and we're not hopeful that our bad play will bounce back. We take our losses when they are manageable, and we move on to the next trade. I hope this helps ease your mind a little bit. Last thing before I cut out of here is I just want to say please sign up and take our two free week trial. This the one thing I recommend to anyone who's still a little bit uneasy about the plays is to start slow. There's no rush here. Just open the positions with one contract or just one spread. This will help you get a feel for how our system works, what credit spreads are and how they move, and just how they react to market movements. Even with taking the minimum number of contracts, you'll still make enough money to pay for our service and make some profits on the side. When you feel a little bit more comfortable, you can start to increase the number of contracts and really start to see the consistent monthly cash come in. Again, thank you for your time. If you have any questions about our service, credit options, options in general, trading, or life, please email us at adam@shareplanner.com. Thank you and have a good night.